This is going to be our agenda today. We're going to go over, the challenges and what opportunities it presents for banks and credit unions, and how you can address those challenges using Oracle EPM Cloud, which is basically enterprise performance management. And then we will particularly, spend time going over the live demonstration of Infovity's Jumpstart package built on top of enterprise planning and budgeting cloud service. And then we will take it up with questions, right? So with that, let's go ahead. And if you look at today in the marketplace, especially with financial institutions, banks, and credit unions, there is, we live in definitely a new world where COVID and the last 2 years have changed how various industries go to market today. And with reference to banks, customers are obviously switching from going to branches to more digital banking. I mean, in the past, we used to talk about cashless transaction, but now we are talking about cardless transaction, right? And in the market today, with evolving technology from blockchain to cryptocurrencies, there are different market players providing multiple opportunities for customers to make the financial transactions easier for them. So there is significant pressure in terms of how banks and credit unions are going to retain the customer and at the same time focus on better customer experience. Right. And coupled with that is the additional regulatory pressure, which keeps on increasing. And then the other thing that we see today is, banks are consolidating their branches. And also, smaller banks are getting acquired and credit unions are getting acquired. And that's the trend that we see today in the marketplace. And then if you see the survey here that has been published by the Global Financial Times on, what is the take of executives in the bank and financial institutions, especially credit unions as well, who are serving the marketplace within, less than $1 billion in assets. And then banks having assets anywhere between $1 billion to $10 billion. What is their take on the demand? If you look at, for example, they are seeing in the last 6 months, they are seeing an improved demand for loan. And at the same time, the funding cost is also going to see a significant increase. Right. So net executives are preparing for an improved scenario, a worsening scenario. And what if I'm going to continue to have the same business scenario? And what this translates into is you need to have systems and tools in place to be able to do scenario planning and analysis and then understand the impact of various key drivers such as your interest rate fluctuation or some change in funds transfer pricing, how all of these are going to affect your overall margin. And so you need to have tools in place. I mean, if you are using Excel spreadsheets today, it's going to take a lot of time for you to come up with strategies. And if you're going to use on-premise systems, then you are spending a lot of time building this model rather than spending time on analyzing the data, right? These are the challenges and opportunities that we have today to streamline your business process, and which is what we're going to see subsequently. And Camille, do you have anything to add here?
I think that in researching for this event and writing for it and whatnot, I did notice that it seems like a lot of people are moving away from the big, well-known banks and more feeling safer in community banks and credit unions. But they probably expect the same level of service and everything like that. Can you talk a little bit maybe about customer expectations in these markets as well, and kind of how COVID changed that as well? We were kind of talking about how you haven't been to a bank, and I haven't been to a bank in forever. So just kind of talk about how some of this has changed their expectations.
Absolutely. So when it comes to, customer expectations, ability to service them is going to be very, very critical. And customers have several choice. There are multiple funding sources that customers can tap into, Amazon, Google, and some of these tech companies are now able to offer different products in the marketplace today. And that is also adding up to this. And this is where, having an integrated platform that not only allows you to better plan your business, but also record all the transactions and report on them, and then understand the customer dynamics so you can be more agile. And that is going to be very critical in the marketplace today, right? So I would say that, financial institutions taking time to achieve that digital transformation is going to be very key. And in the last 3 years, if you see, a lot of companies have moved from a homegrown server environment to more of a cloud-based offerings. And that is what we are here to talk about. And we continue to see that adoption increasing exponentially in COVID situation. And then a lot of financial institutions are looking for opportunities to reduce cost and at the same time be able to concentrate more on their innovation rather than trying to spend their energy in setting up these systems. And that's what we're going to be talking about today, how Oracle and Infovity can help them effectively address that. Yeah. So let's also take about some more survey points, how challenging the marketplace and the environment today is, and what is critical for executives today. And you can see here, there is a larger emphasis on forward-looking planning, right? 54% of executives, they would like to do rolling forecast. They would like to understand, how different key business drivers are impacting the margin, and should I be, increasing my assets or decreasing my liability? How does that play out in my P&L, and be able to do that forward-looking projection in a more dynamic and agile fashion. And today, the tools, especially Oracle actually brings machine learning and artificial intelligence to look at the historical actual and then project your balances. And then from a planning point of view, you then just look at the numbers here, and then it makes sense to you. You move forward with the plan, right? And that kind of a sophistication Oracle actually delivers to the market today. And with these type of expectations where, companies are looking for forward-looking planning and rolling forecast, this is going to be very handy. What I'm going to be showing today is going to be very, very handy. And as I was mentioning earlier, there is a rapid progress towards moving away from a homegrown on-premise system to a cloud-based platform. And the other aspect is the volatility, right? In this volatile environment, should I be opening a new branch? Should I be closing an existing branch? And how do I actually create an opportunity? All these things requires a very dynamic modeling capability, which allows you to bring in data from multiple sources and perform this analysis without spending too much time integrating these systems, and then spending time and energy on modeling various scenarios. And that's what we're going to be talking about today. And with reference to Oracle Enterprise Performance Management, those are the key things that we address, right? How do we enable you to do more forward-looking planning? And that can be done using Oracle Planning Budgeting System, right? And enterprise performance management gives you a whole suite of application. And in this webinar, we are going to be concentrating on planning and budgeting, but you have the ability to set up a reporting platform that allows you to bring the structured and unstructured data into what we call as narrative reporting, and then prepare your 10K, 10Q based reports, and then prepare your budget package as well, so you can take it for your approval. Right. In addition to that, you might be running Jack Henry or Pfizer, and you might be running multiple systems depending on, the new banks that you are acquiring. Then you can use the financial consolidation and close to bring in the trial balance from these various sources, and then perform the consolidation, and then, be able to report on your average balance as well as your ending balance, and then push that back into the planning platform so you can do more real-time actual versus budget reporting, right? So those are some of the key components that Oracle EPM provide. And then if you look at during a close cycle, right, account reconciliation becomes very key. The faster you are able to reconcile your accounts, the faster your close is going to be. So Oracle provides you what we call as reconciliation cloud service, using which you can very easily set up reconciliation for any of your balance sheet items as well as your P&L item. And then say, for example, prepaid expense you want to reconcile, you can very easily do that using account reconciliation. And then you have things like profitability and cost management, where you can do your both direct and indirect allocation, and then perform your profitability analysis using the tool set. The good news here is, all these components are delivered using one single platform, and you can either take a jump start, big bang approach, or you can implement these components in a phased manner. And in this demonstration, I'm going to concentrate primarily on planning and budgeting. And let's talk more about that, right? Planning and budgeting. And what we have done here at Infovity is we worked with a number of customers implementing Oracle Planning and Budgeting Cloud Solution. And these are some of the key logos that you can see. And as Camille was mentioning, we not only focus on EPM, but also we do the whole ERP, procure to pay process, order to cash process, the whole ERP, and then hire to retire process from a human capital management side as well. So we do deliver the whole Oracle suite of applications from our implementation perspective. And then in particular with reference to, banks and credit unions, these are some of the financial institutions that we have actually worked with. And a couple of them I will highlight here. For example, Silvergate, they are, a financial institutions essentially focusing on cryptocurrencies, and they actually went from their legacy platform to Oracle ERP, General Ledger, and Oracle Enterprise Planning Budgeting Cloud. Right, so what they are now able to do is they are able to actually bring in their transactions into the GL, and then go through that month-end close more effectively, and create all those journal entries in GL, and streamline that process, and then bring that over to the planning budgeting system to plan for interest income, interest expense, non-interest income, non-interest expense, and then also plan for FTP, and then eventually do your gross margin and your key ratio reporting and all of that, right? So Silvergate is a classical example of that. And then Mechanics Bank also did a similar thing. They were based out of Fiserv, and they used Fiserv Prolog and Fiserv Core, and they did this implementation way back in 2017. And when they did that, they actually moved from Fiserv ERP and Excel-based planning process to Oracle ERP Cloud and the planning budgeting system, right? And they realized tremendous benefits in terms of being able to detect frauds or detect any non-compliance PO, and streamline that entire process, procure to pay process. And then from a planning budgeting point of view, they were able to cut down their budgeting cycle time by 60%. and they improve efficiency by having their managers key in the OPEX and then, consolidate. And today they are doing, what if analysis and all those type of sophisticated reporting, including call reporting. They derive the data required for call reporting out of the planning budgeting system and then perform the reporting process. So in the last 6 years, what Infovity has done is, based on their experience working with number of financial institutions, we have built a jumpstart package which allows you to do things like, loan modeling. You can do the entire cash flow at the instrument level. Right, you can bring in let's say you're going to start your budget cycle as of 1st of October, as of 30th September, you can bring in all your instruments from your core system, whether it is Pfizer or Jack Henry, you can bring in from there and then, use this system to do your entire cash flow, which I call more of a detailed instrument level planning. And also, you can also do more like an instrument type level planning, or you can also do it at the GL account level, right? The system gives you that flexibility, and then, we are delivering, dashboards and pre-packaged reports as a jump start. So, we don't spend time in, building these models and calculations. Rather, we spend time more innovating, more automating your processes as we implement the Oracle Planning Budgeting solution. Right, and with that, we can set up more driver-based planning. Say, for example, your non-interest income, you can set up your driver-based planning, and then when it goes to loan, you can define things like your prepayment speed and all of those good stuff into the system, and then be able to perform your consolidated P&L and balance sheet plan. And what I'm going to do now is I'm going to walk you through in the next 20 minutes. I'm going to walk you through how that jumpstart package looks like and how you can leverage the enterprise planning budgeting cloud service to streamline the data collection, to allow your budget owners to come in and review the budget and make changes to the budget, submit the budget for approval, and also build the rolling forecast, and then eventually do ratio reporting like net interest margin or yield on loan, and then be ready for your monthly forecasting or your quarterly forecasting cycle. Right. So with that being said, I'm just going to go ahead and actually show you a demonstration of how you can use the tool to perform some of the things that you may be doing today in Excel or maybe in some other on-premise based tool, even if you might be using Hyperion Planning, right? If you use Hyperion Planning, this is really a big time to move from Hyperion Planning to the cloud-based Oracle EPM solution. Right. So with that, let's just go ahead and take a look at the demonstration, and let me move the screen to the demonstration.
While you're moving it, Kanapan, I just want to remind everybody, go ahead, feel free to just ask the questions as he's going, and we'll address them at the end, or you can hold on till the end, but either way works. So chat or the Q&A panel, and I'll keep track of those.
Yeah,
thank you.
Perfect. Thank you. So in the demonstration, I'm going to walk you through how you can use the system to do the interest income and the interest expense. And as you go into Oracle EPM, excuse me. As we go into Oracle EPM, you can see here, this is basically the home page. And there are different cards here, depending on your job role, you will have access to any of these cards. And let's say you want to basically review some of the financial reports, right? This is not only a planning budgeting tool, but it also gives you the ability to set up dashboards and reports. And let me quickly show you what a dashboard looks like, right? And before we go on to see how you can do modeling. And that's basically, if we go into this financial institution dashboard, you can see at each branch level, you can see, at the total bank level, what is going to be my interest income and from the loans, and what's going to be the interest income from securities, and from CD perspective, what is going to be my expense. and then non-interest expense such as your payroll expense, professional fee, hardware services. So all these dashboards you can set up on top of your budget data, forecast data, actual data, right? You're looking at your budget data right now. And then these are very interactive in nature. For example, I could actually just click on Q2 and then drill down, and then it's going to show you my monthly numbers from a loan perspective. So here you can see this is going to be the interest that you are expecting to learn from a conventional loan, right? And different types of loan, what is the interest you are expecting to earn across different months for the total bank, right? If I want to look at my different branch, I can select my branch and then hit on continue. Then the system will refresh and show you the information, right? So in addition to this, you can also do things like ratio reporting and net income. So let me show you another dashboard here. And here's an example of another dashboard that shows you the net income. And so this is more from an executive perspective. And you can also use the system to create more of a standard financial report, which I will show you a little later after we cover the loan model. So when you start the planning cycle, right, as I was mentioning earlier, you could do your entire cash flow in systems like Fiserv or Jack Henry, or you can leverage the planning system to do the entire cash flow at the instrument level, right? So what you see here in the screen is we have actually brought over each of the instruments coming from different branches from your core banking platform. And that is going to give us, as of a particular month, what is going to be my GL balance, what is going to be my interest rate, what is going to be my maturity date. And all these are various attributes that are there in your core platform. We will bring that over through integration. And as this is brought over, the system can generate the cash flow. For example, let's take this first loan, right? This loan is going to mature in October 2021. And you will see that when I go to the loan model projection, you'll see that the loan is getting projected until October and it drops to zero because the loan gets fully repaid as of October 2021. Right? And then, so because of this, if you want to retain the same balance in the balance sheet, somehow a new loan need to be generated. So you can see here, catch-up balance is showing you the catch-up is going to be from the month of October. It's going to be 350 grand because that's the original loan amount. And that actually came all the way close to 92K. And then on the last month, it is getting completely paid. So you need to replace that with a new volume. So the system gives you the ability to generate the full cash flow. And you can also see here, the interest income projection drops to zero as of that month because the loan is getting fully paid. Right? And let's say for some reason this need to be changed to, let's say, for example, the loan is getting matured, not in October, but let's say in November, and I'm just going to submit this information. So the calculation will happen in real time and it will aggregate all of this information. And let's go to the loan model projection. And then you will now see that, my loan balance drops to, the interest income drops to zero in the month of November. And also you'll see that the loan balance now drops in the month of November. So like this, you would be able to actually, change, even the interest rate. And then if I scroll further, you can see various attributes like, for example, annual prepayment speed and all of that you can define. And then the system will do the projection for you. And all of that eventually rolls up into your particular GL account because, you know what GL account your loan product is mapped to. So this is your balance sheet, how it looks like. And this is essentially on the P&L side, the interest income portion of it, right? So now this, you saw how you can bring in this is all from an existing instrument point of view. So on day one of your budget cycle, you will have visibility to what does my budget look like for my existing instruments. Let's say you've got like 15,000 instruments. You have it on day one, your entire cash flow, your P&L, and your balance sheet for your existing instruments, right? On top of that, you can define your goal for the next year, right? What should be your new volume? You can define that goal and have that automatically spread over. And obviously the system gives you flexibility to define your interest rates, and then you can have your floor and ceiling, and then have the system automatically pick up your interest rate based on whether it is a fixed loan, interest rate loan, or a variable interest rate loan, and then define your goals so you can project the new volume on top of your existing volume, right? And that's what we are doing here, and all of that gets added up to loan review. Now, you might say, well, we don't want to do this at each instrument level. You want to do it fairly at a higher level at loan type, and you can do that as well, right? For example, as we bring in all the instruments, we can consolidate that for you. And then, what does it look like from a commercial loan, agriculture loan, auto loan, all these different types of loan for different branches. And then you can define key drivers like your weighted average interest rate and all these prepayment aspect, and all of that you can define at a high level, and then the system will do the balance projection, interest income projection. So here it is not cash flow, but it is more of at the loan type level, right? The system supports both, and we can help you configure both of these options, and eventually they all will roll up into your loan budget, which will then consolidate into your overall balance sheet and P&L, right? So this is going to be very key. Tomorrow, if you have to change certain drivers, it's easier for you, and then assess its impact on the overall P&L. Right, so that's on the loan. Similarly, you can also do things like deposits, CDs, and securities. So let me quickly show you on the security side. And here you have security model. And in the security model, you can see, we can import the data from third-party systems and then be able to model them in terms of book value, par value, and then the system will do the interest income projection and then do the security review budget as well, right? So this is again security model, and similarly you can do your time deposits and then bring in the deposit types and then do your model in terms of projecting the existing deposits at the deposit type level, and then you can define your goal, and then you can review your deposit budget, right? So that actually make up your interest income and interest expense. And now let's talk about non-interest income as well as non-interest expense, right? And when we talk about non-interest expense, the key thing is about your workforce, right? Because that makes up your big portion of operating expenses. So you can use the system to bring in your payroll information at every single employee level, and be able to actually plan for your head count and plan for every single employee in terms of planning for salary, 401k, benefits, payroll taxes, and all of that you can plan, and then review the overall payroll related expenses by each branch. So you can do it at the employee level, roll it up to the branch, and roll it up to the overall operating expenses. And then you can do your new hire planning. You can do your termination, transfers, all of that. And if some of you need to get into some of the details, feel free to get in touch with us. We can do more detailed demo where you can go into some of the details like how you can define your assumptions, such as your merit increases, bonus percentages, and all those type of things. so the system can easily, project it for you. Right. So in addition to that, you can also do cost center expenses. And this is an example of a template where, you can go ahead and do, for example, for 2021, let's say you want to select loan region 1, and then I want to apply. And now you can see that, various salary expenses for this particular region or department. And then as I scroll down, you see there are, cells that are in gray color, which is read only, because if you see, this is all going to come from workforce planning, right? Because they're all salary related information. And then, all these cells here, these are some of the expenses that you want to capture. And then let's say, for example, you want to update your legal fee from 125K to 250K, you can simply enter that, and then the system will automatically spread that for you. It spreads that for you, and then you can right click as part of the budget process. You can put in your comment, you can put in a supporting detail. You can also review your change history, who changed what, when it was changed, right? Especially during the budget cycle, having the audit trail is going to be very helpful. So every template that you are seeing here so far, these templates have all these functionalities. So I can submit this information, then this professional and legal fee will get updated, and the overall P&L will also get updated as I'm going to submit this information, right? So let's do that here. So I've submitted that information, and you can see it was earlier 715K, and now it raised to 840K because the budget got consolidated for this particular loan region across the book. Right. So these are all different operating expenses. As I am scrolling up and down, you can see various expenses, and then things like your income, such as your credit card initiation fee or loan fee or escrow fee. All these type of non-interest income can be taken as a direct input, or you can set up drivers that is going to look at your different key metrics like your loan volume or number of loans in the branch, what have you, that can also be brought over into the system, and then you can plan. And at the end of the day, as users are providing input, the system does the aggregation in real time. So if I go into a financial report, right? If I go into a financial report, I can review a budget report or an actual report. And that will basically, for example, balance sheet comparison or review ratios. All these are, reports that you can define once and run it every single time. And let me show you here, for example, income statement with a drill down. I can just run it as a HTML or a PDF or an Excel file. And I'm just going to continue here. And so it's just basically asking what month I want to run this report for. And as I am selecting this report, now it's going to show me the P&L. So this is a standard P&L in terms of, your loan, interest income, deposits, expense, and the whole P&L. You can look at it and say, for example, I can drill down on salary and employee benefits, and then it's going to show me all the GL accounts underneath it. Similarly, I could actually drill down on loans and then retrieve my information, right? So this is an example of how you can leverage this platform not only to do your planning, but also your reporting, and also define key ratios, like, for example, so as you prepare the budget, the system will take care of doing your, from your ending balance, it will calculate your average balance, and then it will then be able to show you your net interest margin at the total bank level, or it can show you at individual branch level for each of the loan products, for example, net interest margin or yield on loan, and all these type of key ratios. The system does all the calculations for you, because it has the intelligence of whether to use actual by actual or actual by 365, all those type of key things in the system, and be able to generate these type of reports, right? So far we have seen, how you can do your budgeting from interest income, interest expense, non-interest income, non-interest expense, operating expenses, all of that in the browser. And you have the same thing available in Excel spreadsheet too, right? For example, I can go to a blank Excel spreadsheet and then connect to the repository. We were looking at the input, cost center input. Let me just double click and open that template for you. And this is what we are looking at, loan region 1, and I'm going to do a refresh. And this is all the data that we were looking at earlier. And if I go to legal fee, you will see that, we did this 250K. And that change you can see here immediately. I can change it back to 150K here, and then submit this information. The system will once again perform the aggregation, and then it will basically bring over the data. Let me just update that here again on 50K. And then as I submit this information, the system will perform the aggregation, and then you can see it in the browser as well, right? So this is again, all the templates that you have seen, they are available to you as you prepare the budget, right? Let's say you want to look at the next year budget, and then I'm just going to continue on here, and you can see that this is an example of how an overall template looks like. So here you are looking at 2021 and the overall budget, how it looks like as you consolidate this, right? In addition to that, you can also do what we call as ad hoc analysis. Let's say you want to analyze this report and then drill down to the detail and perform analysis, right? So I can easily drill up, and now I'm looking at my fiscal quarter, and here you are looking at my 2020. I'm looking at my budget. I can also, look at my actual, drill down on my net income. Excuse me. Right. So planning ad hoc, and I can do what we call a zoom in, and now you can see a income before taxes and after tax, and you can zoom in further, and it will take you all the way to provision after loans. You can continue to zoom in or double click, right? And this is your non-interest income and non-interest expense. I can go ahead and zoom in further, and now you can see different non-interest income, and you can double click on net interest income, then it will show you loans and deposits, right? Total interest income. So it's very easy to analyze the information, and now you're looking at my loans and deposits, and now I can double click on my year total. Excuse me. I can zoom in on my year total. I can zoom in on my year total. It will show me my 4 quarters, and now I can easily perform my analysis by slicing and dicing the data. And so these are basically your point of view. You can review the P&L for the entire bank, or you can look at different hierarchies. You can look at it across different entities and different roll-ups in terms of service centers, branches, and then you can review and analyze this information. So what you've seen so far is a very comprehensive tool that, if you look at, for example, version, I can come up with, pre-COVID, post-COVID type of version, and, scenarios, all these are different scenarios, right? And for each scenario, you can define your own version, like working version, final version, goal version, pre-COVID, post-COVID, and then understand the impact of some of the key drivers in the overall P&L and the balance sheet. right? So with that, let me just go back again to the presentation very quickly. And what I have shown you here is how you can use the system to do the planning and budgeting, reporting, bring in the information from your core banking platform, whether it is Fiserv or Jack Henry or any other system that you have, and then bring over the GL data as well, and set up your planning process and make it more efficient, user friendly, and that way you can improve the accuracy of the budget and reduce the cycle time, and then perform more of a rolling forecast scenarios by bringing over the actuals in a rolling fashion, and prepare the budget and forecast.